Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business. Today we are diving into Atlassian's latest quarterly report and finding out if their teamwork tools are really working, or if their finances are just playing well together on paper. I'm kidding. Atlassian is actually a great company, but stay tuned for details. Before we jump in, if you're into understanding what makes businesses tick, make sure you're subscribed. We also have a Discord community linked in the description below if you want to join us. Today's report covers the period ending March of 2025, and Atlassian is telling us all about their performance. This includes their financial status, profits, losses, and what they see coming down the road. It's like peeking under the hood of their business engine. First off, this is a Form 10Q, which is a quarterly report card for investors. It shows how the company performed over the last 3 months. It's not a perfect picture, but it's a good snapshot. Let's quickly check in on their assets. As of March, Atlassian has about $2.3 billion in assets that are measured at fair value. Fair value simply means that's what they could likely be sold for right now. These assets include cash equivalents, marketable securities, and derivative financial instruments. Jumping to the balance sheet, we get a clearer financial health report. They show about $642 million in accounts receivable. Accounts receivable is basically the amount of money owed to them by customers. That's a good sign showing their subscriptions are in demand. Next up, let's look at the long-term debt. They are reporting about $987 million. Long-term debt is what they owe over a longer time period, more than a year. It can be used to finance ongoing and future projects. It's essential to keep an eye on this because too much debt can limit a company's flexibility. Now let's talk profits. Looking at their condensed consolidated statements of operations, which shows how profitable the company is. Total revenue for this period, the 3 months ending March 31, was just over $1.3 billion. To note, subscription revenue makes up the lion's share of their earnings at $1.27 billion. To put this in context, it means people are paying for their products like Jira and Confluence rather than just buying them outright. However, they also report a net loss of about $71 million. That means they spent more than they earned during this period. However, this is largely due to some non-cash compensation expenses, which we will cover later on. That translates to a loss of $0.27 per share. If we compare the 3 months ended March 31, 2024, they reported net income of $12 million or a share of $0.05. It definitely shows a downward trend. Why the loss when revenue increased? The reason is their costs also increased. Cost of revenues rose from $213 million to $219 million. Operating expenses, which includes marketing, salaries, and research and development, shot up from $1957 million to $1.1 billion. This is a lot of spending. A good chunk of that increase is from stock-based compensation. Let's check how much stock-based compensation affected things. Stock-based compensation in cost of revenue went from about $17 million to about $21 million. Research and development saw $190 million to $240 million, and marketing and sales went from $33 million to $43 million. General and administrative went from $40 million to $41 million. All in all, these non-cash compensation costs added up. Moving on, the report also details what's called comprehensive income, which includes things like foreign currency adjustments and gains or losses on certain investments. Basically, it shows all the changes in their financial picture, not just what's on the income statement. Comprehensive loss, which is basically the opposite of income, was around $58 million. A big chunk of this change comes from something called cash flow hedging derivative instruments. That sounds complex, but it simply means they're using financial tools to protect themselves from interest rate changes or fluctuations in currencies. Now let's switch over to the cash flow statement. Cash flow is the lifeblood of any company because this part of the report details the ins and outs of cash operating activities, which comes from things like subscription sales brought in $652 million. Investing activities took $76 million out. That amount is mostly from buying marketable securities. Lastly, financing activities that include stock repurchases took out around $134 million. At the end of the day, they had about $443 million ARBOR, $443 million period. So a good increase. What about potential risks they see? Scrolling down, let's look at commitments and contingencies. Regarding legal issues, they stated, from time to time, we are party to litigation. This is normal, but it means potential future costs are in the works. They also have agreements to protect their customers and company leaders from certain claims. It is an important safeguard to have. Let's quickly go over some notable risk factors because these are very important. The markets are competitive. They face rivals like Microsoft and Google. They could create a more compelling product or lower the prices, and Atlassian needs to stay ahead. Security breaches are a major worry. If hackers get to client data, they risk losing customer trust, regulatory fines, and lots of costs to fix the problem. Privacy is also a big deal. Laws about data use are always changing, especially in the EU and the US. If they don't comply with these, they could get hit with big fines. Finally, the way their stock is set up gives a lot of control to the founders, which could limit how much other investors can say in big decisions. There were also a few updates on trading plans made by the directors, giving insight into how the executives manage their money. Now, summarizing our breakdown, Atlassian is still growing, but costs are going up, and there are a number of risks to keep an eye on. They are a good company, but it's important to consider these numbers carefully. Alright, that's our breakdown of Atlassian's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for real-time thoughts and insights. Thanks for watching. See you next time.